current market value of Tesla is about $700 billion. So we're talking about 10% of Tesla's value. So it could be significant. But in any case, pay attention. Let me see where it was. That stock-based compensation expense that you can find under statement of cash flow, not all of that goes to directly research and development. So you need to figure out whether some of it is part of cost of revenue. If it is, you need to make an adjustment. And, in Tesla's case, they actually make that distinction. But for most companies, most of the stock-based compensation expense is tucked in under research and development. That was especially the case for example, Twitter, before Elon Musk paid a lot of money. I don't think that company was worth $15 a share. He paid over $44. But it's kind of his money, so he don't care. The guy is worth over $200 billion. He could lose $45 billion. And I think he's going to on the whole deal. What else you need to pay attention to? Let me see. Okay. This is Netflix. Another place you find it under statement of stockholders' equity. Since stock-based compensation expense is technically not an expense itself, because of double accounting, you actually need to double enter bookkeeping. You need to create a contra account. Let's say you issued options, right? And they're worth, as of that time, $30 billion. And this year, you charged off $10 billion as expense. In accounting, I need a balancing item somewhere. Well, the options themselves are contingent liabilities, but they're not in the balance sheet. So if you're showing that as an expense, it reduces your net income. If it reduces your net income, it reduces your total retained earnings, right? So you need to balance that in the statement of equity. It basically goes in as an equity number. It increases your equity by $10 billion. It shouldn't, but it does. Let me see, they have comprehensive income statements. Oh, okay. One thing you need to pay attention to, foreign currency translation adjustments. in this case, when you have subsidiaries that are in other countries, even though they haven't actually lost any money, since when you're doing consolidation, you have to translate those foreign balance sheets into US dollars. These guys actually lost about 94 billion because of that. That is not technically a loss, but since you're consolidating balance sheets, you need to show that. Not all of that is an actual loss. This may be something you need to look at. Net unrealized gains and losses. Again, I'm not going to cover this in this class. There are two types of assets or contingent assets or liabilities. One, if you have investments for long term. I think they had a term for that in accounting, but I forgot. You keep them in the books at historical cost. Let's say you bought 2% of Google, you didn't buy it for trade, then neither short-term investments nor securities for trade, but that thing also gained in value. That's not going to show up in your balance sheet. So you need to show that. In net unrealized gains. In this case, these guys actually have cash flow hedges. Sometimes you take positions using derivative contracts. Some of it may be to get rid of foreign currency risk. Some of it could be to get rid of interest rate risk. But if they're cash flow hedges, you don't mark to market them. If you're not hedging a direct exposure, you cannot mark to market them. So these guys actually have $77 billion, or million dollars, I'm sorry, worth of unrealized gains. So you may also look at those to adjust your earnings. That's pretty much all I'm going to say about these. I'll give you guys as a homework assignment one firm that is not related to your group firm, so that you can go through these. I want you to download, I'll post it later during the day. I want you to download. There's 5 Qs and 10 Qs and 10 Ks the last 5 years, and essentially create a table for each quarter, and then calculate things like PE, forward PE, trailing PE, and based on your adjustments to earnings, something like forward enterprise value and EBITDA. All right? I'll give you more details in the assignment itself. I want you to do it. A, I'll have a homework assignment grade for you, and B, so that you get into habit of using those financial statements. So which company do you guys want to work on? And everybody's going to work on the same thing. I'm assuming you're not going to work together on that, relying on the honor code. Any company that interests you, that you want to look at? You're finance majors. Isn't there a company that interests you? Huh? Lockheed Martin, okay. So let's find out their LMT. Okay. I mean, I'll post it later today after my classes are done. But if you want to go ahead and start downloading 10Qs and 10Ks for the last 5 years, it's kind of manual work, but you can also look at how their accounting policies change over the years. Because when you're making valuations, those kind of things also matter. So when you write your report at the end of the semester for your 2 groups, I want to kind of see details. That's why, you delve into that sort of stuff. If there are certain accounting things you don't understand, you can always ask me or your accounting professors. I'm available. All right? So this assignment is going to be due next Wednesday. It's not going to be too heavy. The heaviest part is downloading the statements. You guys have any questions other than that? And I'll see you guys Monday. I'm going to keep you busy this weekend.